Hi all, Shelly again from Henderson Business Services. Thank you for joining me for the next video in the series of QuickBooks how-tos. On today's video, we're going to discuss the chart of accounts. So let's get started. There's several different areas here we need to touch on. So in this video, I want to go over the different types of accounts that we have here and explain a little bit about them. First, we have the bank accounts. That's pretty much self-explanatory. It's checking, savings account. This type of account can also include PayPal, Venmo, and others if you hold funds in those accounts prior to transferring them to your bank account. Accounts receivable. This is invoices that you've sent to your customers that have not been paid yet. Then we have inventory. So inventory is used by businesses who hold inventory. Just a quick note here, if your business has inventory, you must use accrual basis accounting. And we're going to talk about that in just a second. Next, we have prepaid expenses. Again, this is for businesses that use accrual basis accounting. Let's stop here real quick and discuss the differences between accrual accounting and cash accounting. Accrual means you're going to recognize the revenue when it's earned. When you send an invoice to a customer, you're going to recognize that revenue at that time and not when it's actually paid. Likewise, with expenses, you're going to recognize the expense when it's incurred, so that means when the bill is received, instead of when it's paid. Cash basis is the opposite. You recognize revenue when it's received, regardless of when it was invoiced, and bills when they're paid, regardless of when the bill was received. So for instance, with prepaid expenses, sometimes you'll pay insurance for the entire year, such as with workers' comp or something along that lines. When you're using cash basis accounting, you're going to recognize that entire expense in that month. So if you pay your workers' comp in January for $1,200, you're going to recognize that entire $1,200 expense that month. With accrual basis accounting, what you would do is you would allocate a portion of that expense each month. So you would put the whole $1,200 into the prepaid expenses. So each month you would create a general journal entry and move $100 from your prepaid expenses account into your insurance account. So at the end of the year, it would look like you paid $100 each month instead of that entire $1,200 at the beginning of the year. Other current assets. Now, there's a lot of different things that can fall into this, but typically this is assets that can be turned into cash within a year. Undeposited funds. This is a holding account for QuickBooks. When a customer makes a payment directly through QuickBooks, the funds appear here until they've been deposited into your bank account. This takes a day or two. Now we have fixed assets. These are assets that you're going to use for the company for several years, and these can be things such as vehicles, equipment, building, etc. Accounts payable. This is similar to accounts receivable. These are going to be where you enter your bills in that you receive from your vendors, but you've not paid them. So it gives you a snapshot of what you owe. Next is credit card. This can be any type of credit card that you hold for the business. And I do stress here that it's better to keep these for business purposes. So if you have several credit cards, I would allocate just one for business purchases and not use it for any type of personal expenses. Next, we have our current liabilities. These are going to be liabilities or something that you owe that are due within a year. So long-term liabilities are liabilities that you owe that it's going to take over a year to pay for them. So vehicle loans, building loans, mortgages, things along that line. Next is equity. We have opening balance equity. This is the amount of money that you put into the company to get it started. Next, we have retained earnings, and this is going to be the amount of either that you profited or you lost each year. At the end of the year, if you've profited, the retained earnings is going to be a positive amount. If you've had a loss, the retained earnings will be negative, and that's going to directly affect your opening balance equity. Now we're ready for income. So income is industry specific. Our sample company here is a landscaping company. So a car dealership, a barbershop, a website developer, or a restaurant would all have unique income accounts. These would be vastly different than what you see here. All right, cost of goods sold. This is used by manufacturing companies primarily. Then we go into expenses. Expenses are like income. They're going to vary vastly by industry. So what you see here is for a landscaping company. This would not be the same as you would see for a restaurant or barbershop. So join me next time, and we're going to go through adding and editing line items in the chart of accounts. I hope to see you soon. Thank you for joining me today. I hope this information has been useful. Don't forget, we offer QuickBooks setup, cleanup, and tutoring services. Don't hesitate to reach out to us at HendersonBusinessServices.com to set up a free consultation to see if we can help you. We hope to hear from you soon.